What's going on, everybody? This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the forex market. Today is Tuesday morning. This is another early morning session of Trade with Travis. Hopefully, everybody's doing very well. If you notice that I'm sweating, it's because typically in the mornings I've been trying to get back on my workout game and been running a couple miles each and every morning. So just trying to get back into that pace. But hopefully, everybody's doing very well. If you see me use a towel, you understand why, or a shirt, or anything else like that. But without much being said, let's go ahead and get started. I'm gonna go ahead and go through the disclaimer, and then after that, we'll talk about some overall trading opportunities, what ended up happening early this morning, if there is a trading opportunity, and what we should be looking for. Obviously, when the market ends up opening up at 8:30 for forex and for 9:30, obviously for the stock market. So I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, give me 1 second so I can be able to make sure that I can make sure that everybody's able to be able to see what we're doing for us this morning. Make sure that my good old folks over on excuse me, my good old folks over on the tube can be able to see me. So I'm going to send over this link to everybody just to be able to make sure. It'll be 1 minute. Just give me a second. Excuse me. Let's see. But as y'all end up popping in, make sure that y'all end up saying, hey, make sure that y'all, if y'all have a currency pair that y'all like to be able to take a look at or anything else like that, please make sure that you end up typing that in for us, the overall pairs. Obviously, we go through Forex pairs, we go through indices, we go through Bitcoin, we go through oil, we go through gold, we go through a few stock pairs. I'm not necessarily a stock trader, but a setup is a setup. So there's always going to end up being some opportunities when it comes down to those movements. And while I'm getting this set up, and we'll go ahead and talk about what's going to end up happening today. So today's a fundamentals day. You take a look at it from the news that is actually coming out. We got a few things that are about to come at 8:30, which will end up being consumer price index. The consumer price index for food and energy is going to end up coming out, suspected to be 0.3 currently right now. The overall expectation is hopefully to be the same as it was in the previous month. Let's see. Come on. We gotta get this over with so I can make sure everybody has it. Everyone, just give me 1 quick second. I'm just gonna finish up on this last part, and then after we can get started. I'm sorry for the delay. Should have did this morning, but okay. Here. Almost done, and then after that, I can be able to answer the questions on this end as well. Let's see. Copy. Paste. Save. Okay. All right. We should be good to go when it comes down to that one. See. And last thing. Come on. YouTube's to move. Sorry for taking so long, but once again, I do apologize. All right, perfect. Good. So, all right, so here we go. Let's go ahead and take a look at the big three. Let's see what's going on with those. And then after that, we'll go ahead and get into the Forex pairs and be able to take a look at that as well. And kind of make a lot of sense out of everything. So if you're not familiar with what I end up doing when it comes down to the big three is the United States dollar index, it is oil, it is gold. The reason why we take a look at those is because it gives us a better idea about what's going to end up happening in the overall market. in general for its overall movement. The reason why I like doing that is because obviously you want to be able to find the best opportunities for being able to um, you want to be able to find the best opportunities, but you want to be able to filter out bad opportunities as well. The only way that you can be able to do that is by being able to take a look at the overall index, because the index will let you know what's happening for the overall move. So I'm going to start off with oil because that's the first thing that showed up on my screen. So we take a look at what's happening with oil. We talked about this bearish crown that could end up happening where the market um, has broken a daily A and it has a chance of being able to fall to the downside. But if you look at it from a weekly perspective, just from that retracement has hit a D extension already at 83.01. That's the reason why I think that the market actually ended up popping up. There could be a chance that the market could continue moving towards the upside. Remember, we're getting close to the winter months, and because we are getting close to the winter months, you're probably going to end up seeing more people look to be able to um, I'll probably look to be able to start buying on the oil, just because typically that's when the prices typically start to rise up a little bit more. So especially going into October, late November, I would expect that oil is going to start having this yearly push to the upside and start to be able to push up. And depending on what may end up happening between any type of fear tactics or any type of war or anything else like that, it may end up pushing up the price a little bit higher than what it may end up being. We go to the daily. We can see that the daily is kind of moving in an upward direction, and the weekly is still currently, quote unquote, to the downside. It's still a channel that still has to be broken in order to be able to consider looking at being able to take a buy trade on oil. Currently, right now, I'm still not interested in being able to make a move off of this one as of yet. But once it breaks out of this overall area, then after that, I will start looking at being able to get into my trades and start looking at being able to buy when those opportunities start to present themselves. At this particular point in time, there's no movement that I'll be interested in on oil, which means that I'm probably not going to be interested in on Canadian dollar pairs when it comes down to that movement. So oil's out the way. I'm not looking at being able to make a move off of that. Let's take a look at what's happening with the United States dollar index. United States dollar index. We talked about this market being able to have a fall off after hitting the weekly D extension. The market has hit a daily D extension as well because of that movement. I'm sorry, because it ended up hitting a daily D extension and ended up hitting the 80-20 rule of a weekly move. Currently, right now, we're seeing an evening star that's actually being created at this particular point. If we take a look at it from a daily perspective, this market could go ahead and start moving towards the bottom of this support of this channel that has been moving to the upside before being able to make a true move based off of that overall area. Let me turn on my camera. It probably would be nice to be able to see me. But at this particular point, I believe that the market is going to continue moving towards the downside. We can see that the stochastic currently right now is at 47%, so it still has a little bit of a ways to be able to go. For the people that may be interested in being able to make a move, I would say take a look at the 2 hour and look to see if you can find some counter trend line break movements or some breakout movements towards the downside that would help you out on being able to make a decision on what you want to do with this move. Currently, right now, we are on the outside of a breakout position on the United States dollar index. So for the people that like to be able to trade the United States dollar index, this would probably be a good time to start looking at it from a 15-minute perspective and seeing if you can be able to make a move. There's a trade to the downside, especially from a scalping perspective, that you can possibly be able to get into and be able to ride that movement out. Let's go back to the daily. What was that at? I'm sorry, it was a 2 hour. We take a look at this from a 2 hour move. This market could go all the way down to 13,072. Currently, the market's at 13,100. If you look at being able to place your stop loss just above the overall high of this consolidation at 13,133, you have a risk reward factor of 1 to 1 if you want to be able to do that. I don't like particularly taking 1 to 1 trades. So you could possibly be able to look at being able to place it at the halfway point, expecting that the market won't go back inside of consolidation, or you can be patient and just not trade it at all. It's totally up to you about what you end up doing. Currently, right now, I don't like the risk reward factor, so I'm probably not going to end up taking that trade. But there is a opportunity to be able to scalp the market if you are interested in being able to scalp for its overall movement. And we'll go from there. Okay, good. Let's go ahead and take a look at gold. Gold, we haven't traded it since literally the summertime. But the one thing that I did talk about was that if you was interested in being able to take a trade, and I'm going to go back to the daily to be able to truly explain this, but we'll kind of go from there. Um, Currently, this market has a long-term support at 1685 and a long-term resistance at 2070. There's a halfway point at 1872 that if the market does break up to the upside, that's where the market could potentially end up going. Currently, right now, it's in a smaller consolidation between 1760, I believe. No, I'm sorry, from 1800 down to 1685. And currently, right now, the market ended up hitting 1685. I want to say it had to be about what day was that when it ended up hitting 1685? On the 31st, it actually ended up hitting 1685, and then after that started to bounce up. Because this is the second time that the market has bounced up in this overall area. I'm sorry, third time, because it ended up hitting right here. Typically, what I end up saying is if you're going to end up taking a trade to the upside or to the downside inside of consolidation, your take profit point should be at the halfway point. You should not look at being able to take it anywhere else other than that point and being able to go from there. Probably be better off being able to do it from that standpoint and getting out. Currently, right now, if we take a look at what's happening with this overall move, from a hourly standpoint, market ended up hitting the support of this rising wedge and starting to be able to bounce up. I don't like trading rising wedges, but this is an opportunity to be able to get in. If you would have got in a few hours ago, would have got a better perspective or a better movement based off of this position. But there's an opportunity that the market could go up to 1738. Based off of the angle that it's going to, and I would look at being able to place a stop loss just below the swing low, right around 17.15 if you're interested in being able to take a trade on gold. Me personally, once again, I don't necessarily trade those positions just because it's in the middle of a consolidation and the market's already been tapped a few times and it's in the middle of a long-term consolidation. So to me, I think that it's still a low probability trade to be able to take. All right. Now, let's go ahead and get into the index pairs. I want to start off with I'm going to end up starting off with U.S. Matter of fact, let's start off with NAS. Because we got a few pairs that we could possibly be able to get into right now as we speak. And let's go ahead and, matter of fact, I like DAX a little bit better for being able to get in, but I can see that the sellers are starting to take a little bit of advantage of that move. But we're clearly outside of this overall zone. I didn't set my pending orders yesterday. I'm kind of kicking myself because of that, because that's a primary rule of mine for this movement. But this is what happened. This is what happened. The market has went into consolidation. There was a natural support, natural resistance that has been broken. Currently, the market at 17,800. Remember, I ended up saying that there was a. Let me zoom out just a little bit, give you some more information so everybody can be able to see it. There was a de-extension that, or there was a point that we could be able to get out of for us being able to scalp at 1820 and respectively right around the 1860 area for us that move. Can you trade Euro United States dollar? Yes, I'll take a look at Euro United States dollar. We'll go over opportunity when it comes down to that. Just give me one quick second. But I do like this trade on NAS going up and taking this and completing this overall move. The question is where I'm going to end up placing my stop loss. Currently, right now, to be able to place our stop loss just below, I would say 1730. That means that you're risking 66 points to go after 82 points. If you end up going after 1870, probably have to bring it a little bit lower if I truly want to be comfortable with that, or a little bit higher if I truly want to be comfortable with that. We could place it at 1758, but that means that, let's see, if we do 1758, entry would end up being right here. Once this market breaks out, we can go with a stop loss right here. That'll be a risk reward factor 1 to 2. I'll probably place it just a little bit below the overall swing low. We'll go 1755. I know it'll keep it within that 1 to 2 risk. Right around that 1 to 2 risk reward ratio. But I actually like that position a little bit better. I would like to see from a 15-minute perspective that this market truly break out of this overall area and not necessarily get stuck back inside of this consolidation. Because once again, this one true rule when it comes down to this movement is that if it gets brought back inside of consolidation, you want to early exit because you're not going to end up because it doesn't make sense to be able to stay in this trade if it is in consolidation for that movement. So um, now, so I'm going to go ahead and look at being able to place in a order off of this movement. I'm actually going to make it a pending order. I wanted to be able to break over. I wanted to be able to break over up top. So currently the market that do I want to risk 14 points? Nah, let's go ahead and take it now. Here we go. Here we go. Let's go ahead and place in this order now. I'm going to set up this position for everybody. Let's see. Okay, stop loss 12,755. 12,755. Okay, take profit. Take two different positions on this one if you're looking at being able to do it for a short term and a long term area. The short term position off of this one will end up being at 1820. Well, I'm sorry, let me rephrase that. That'll be at 1840, 12,000. I'm saying 1840. 12,840 will be the first position where I would look at being able to get out. The second position where I look at being able to get out will end up being right around the 1870 area. We want to get out right before this high volume node actually starts to be able to build up. We can see that there's consolidation that we're kind of going against from the previous month, from August 22nd to August 24th. Don't know if this market is going to remain to be above this one for very long. That's the reason why I'm saying looking at just being able to scalp it. I think you'll have a better opportunity of being able to make a little bit more based off of that movement from there. So I'm going to go ahead and trigger in this trade. All right, that trade is triggered in. Now let's go ahead and place it in the second position. Second position, we're going to try to see if we can take it all the way up to 1860, force that overall movement to the upside, and be able to get out a little bit earlier before this before this market starts to look at being able to find other players in the market to be able to get out of it. I will say this more than anything else. Please be aware that from an hourly perspective, because we're getting closer and closer to this high volume node that's about to start, where all this buildup of consolidation has been previously, well, we may end up seeing that there may be some more players for us being able to get in into that move, for us being able to stop it, or at least being able to block that move, and then start to see sellers try to get in. We are above the long-term trend line. So it may be time for the market to be able to start retracing so we can be able to truly have a upfield move to the upside. But currently right now, I will say that I am trying to finish out this move that we've been trading with over the course of the last 3 to 4 days. So we'll see how everything kind of plays out. If it plays in our favor, that'd be great. Let's go take a look at, where's my US 30 chart at real quick. Let me go ahead and go through Euro United States dollar. I did say I was going to end up talking about Euro United States dollar real quick. This one's going to be rather quick for this move. I always like talking about the starter pack. I think everybody starts off with Euro United States dollar as a original trade or original position to be able to get in and kind of understanding what's happening with that movement. So from a weekly perspective, what's happening with the market? The market is in this large channel that has been moving towards the downside. There's an overall expectation that the market could go down to 89.92. Because of that, and because it's below the B, there is a better chance of one-sided trading to the downside for us being able to get out. Now, with that being said, over the course of the last 2 weeks, the market has started to consolidate, break out, and then after that, push back up to the upside. Now, the reason for that is because I think that the market has been starting to retrace a little bit based off of that movement. We take a look at this from a daily perspective. We can see that it truly has broken out of this consolidation to the upside. So the question is, where would the market go more towards in this position? And are we looking at this a larger consolidation box that is just being created? I would almost assume that we're probably just created a larger consolidation box in this overall area. For people that like to be able to trade consolidation, I still would not necessarily make a move off of this one, at least not yet. And the reason why I wouldn't make a move off of this one yet, because we fell back inside this last consolidation that ended up happening over the course of the last week right here. So we went up, broke into this previous consolidation that was there before. Now, if we just stressed it out, essentially what's happening is that we went from a larger consolidation, broke down, and actually found a natural support. And now we have a natural resistance that we have to go after. So no move in my mind. I would not take any move until the market breaks up above 1.029. And until that happens, there's really no move to be able to take off of this one. So me personally, I would not trade Euro United States dollar. Hopefully that makes sense when it comes down to everything that I just said. But personally, right now, I probably wouldn't make a move off of that one. So the Star Gamer, hopefully that ended up helping you out for that move. Me personally, I'm not going to take a move off of that one, at least not yet. Let's go ahead and take a look at, should have got in this one earlier. Let's go ahead and take a look at what's happening with DAX. DAX, we have an opportunity to be able to get in this one as well. Market ended up breaking out of this consolidation to the upside. I'm going to hurry up and look at being able to place in the orders for being able to make that move. And then after that, we'll talk about where it could potentially go. Well, we'll talk about finishing up the move. So from a D extension perspective, the market is expected to go to 1625. Currently, the market's at 13,478. I'm going to look at being able to place in an entry now, and I'm going to end up placing my stop loss below the bottom of that consolidation that we ended up taking a look at before. And then after that, we'll kind of ride it out this morning to kind of see how well it's going to end up moving. So entry will end up being a market order at this particular point in time. Stop loss. If we truly want to be safe, we could do two things. One, we can place it below 13,379, or you can place it below the overall consolidation at 13,334. 334 is a little bit too much for this overall market room on this one, at least for my liking. I'll probably go back to the halfway point and just below that overall movement. I'll probably go 13,362. That's a little bit below it's just a little bit below the actual bottom portion of support. But it's not a full, well, no, let's see. Let me change this movement real quick. We're looking at getting in up here. That's 147 for 152. That's a risk reward of 1 to 2. We bring the stop loss up to here. It'll be a 1 to 2.8. All right, just to be safe. You don't like taking 1-to-1 trades, please don't take this trade. Because we could have got into it probably about 15 minutes ago and would have been safe. But I'm going to say 13,340. Or you can go 100 pips and say 13,375. And risk a little bit of a 1 to 1.5. Yeah, let's say that 13,375. Take profit will end up being at 13,620. I think that we're running out of room when it comes down to most of these movements. So I'm only going to make this a 2% trade. Obviously, you hope that it ends up hitting that position and kind of completing that overall move. But I think we're running out of room on most of these pairs. So that trade is triggered in as well. Once again, entry is market order. I end up getting 13,478. Stop loss, I end up having at 13,375. Take profit, I end up having at 13,620 for that overall movement. This is a trade that we've been talking about, or this is that continuation of that movement that we've been talking about for a while. We're still kind of running into this large consolidation block that's about to start happening. Matter of fact, that doesn't look as well as I thought it would. to be safe. There's a better number out there. If we look at it from a long-term perspective, this market's going to struggle to probably end up getting past 510, 13.5, 13.515. Hold on, let me take a look at that again. I want to evaluate this one more time just to be able to make sure I'm giving a good take profit. I'm only going to look. Okay, I'm going to check. Man, that's going to mess up the stop loss if we do that. I'm going to. Matter of fact, if you haven't taken that trade, don't take the trade. Not on this one. Let me explain why. If I'm looking at long-term consolidation, we take a look at just a 15-minute from a long-term consolidation area. If we try to get up to 620, we're going to end up being at the bottom of this consolidation that ended up happening from August 3rd all the way to August 19th. But the last true free area, that vortex area, ending off at 557, or end up starting off at 557. So it'll be better off to be able to get out at 557 or even before that, to be able to ensure that you're going to end up making profit off of this move. Trying to squeeze up and trying to catch it before the 7 o'clockers and 8 o'clockers, for us being able to get in, may not necessarily be the smartest move for us being able to stay in. So if you have not taken a trade off of DAX, I actually would say stay away from it at this particular point, because there's not enough risk reward factor to be able to feel comfortable with this move, unless we would have got in probably about an hour ago. I'm gonna change my number up just a little bit. If you're already in and you want to go to 620, then you're more than welcome to be able to do that. I don't like where we're at when it comes down to a volume perspective. I think that we're kind of getting into a large buildup of consolidation that's about to start happening. Because of that kind of makes this one hard to be able to stay in and kind of say, hey, I want to be able to stay in this trade for a very long time. I think that there's probably going to be some built up consolidation that's probably going to happen in the next few days. Let's get into US 30 real quick. US 30 move is probably over with, but we'll take a look at it anyway. Yep, there it is. Ah, dang. I looked at this one early this morning. Same deal. I did not place my pending orders in. So last night, what we ended up talking about was this, and US 30, I would not trade it. US 30, there's not a move to be able to get into it. We had an opportunity actually last night when we talked about this one, and it being inside of this triangle. It actually fell below. If you would have adjusted it again, you would have got in at 450. Could have got out at that 640 number that we was talking about being able to get out of a little bit earlier. Now there's still a chance that it could push up to the 720 number that we said overall. We end up making about 500 points off of this movement. Yesterday, I actually ended up turning this into a $10,000 trade. There's a lot more money on the table that we left off, as I'm looking at it right now. So I'm kind of upset at myself when it comes down to that move, but I'm not going to be mad in being able to make $10,000 for the overall movement yesterday. Wish I would have just stayed up and would have took the trade when the market actually ended up breaking outside of the triangle. But it is what it is on that move. This one is about to be able to close, about to be able to finish, which means that the other pairs are probably going to end up starting to slow down a little bit. So I would be kind of aware when it comes down to that movement. Yeah, that'll probably be about it when it comes down to those opportunities and being able to make a move off of that. Now, XVX 500 market already hit that D extension. We got all of that moved yesterday. That movement is over with. Got to get prepared and start looking at consolidation, start build out that consolidation block when it shows up. US 30 has already done moved up to the upside. That move is already done closed, and pretty much that move is already done closed and finished. I had a big pop to the upside when they ended up breaking past 554. So right when I was looking at being able to get in nice and being able to make this move, this market ended up completing this movement. to the upside. So uh, for the people that actually stayed in the whole time, you're talking about over 700 points of overall movement. Congratulations for that movement. I tried to be able to hold out on tried to be able to hold out on that move yesterday, but I wanted to be able to make sure that I end up staying in profit and making sure that I end up having another $10,000 day. So I'm not going to be mad about that, but it is what it is. Alex, what's going on? Potential reversal on US 30. Yes, there could be a potential reversal on US 30. Um, I've been more bullish off of this move. But currently, right now, if we take a look at what's happening on the hour, essentially what ended up happening was that we ended up having that same movement that ended up happening to the downside um, on August 26th. And I was right during the time when Jerome Powell started talking about interest rates. And I think we ended up having, what was it, FOMC meeting minutes. They ended up coming out that day. The market ended up going up and pushing all the way up to be able to create the top of this channel. And then after that, fell about 1,400 points to the downside on that same day. I believe that was on either on a Wednesday or on a Friday. Was it a Wednesday or a Friday when that ended up happening? Um, but either way, I remember Jerome Powell ended up talking about that on FOMC day, and the market ended up pushing down. Currently, right now, we're just basically fulfilling that gap. And if you look at what's actually happening for this overall movement, yes, it could get up to 820. I do believe that it could possibly be able to get up there. I ended up saying earlier that I wanted to be able to get out right around that 720 area. I felt a little bit more comfortable with that, getting out a little bit earlier before we end up going into the top of or the bottom of this overall consolidation. You could possibly be able to ride this out for another 200 points. Me personally, I think for its a risk reward factor, it doesn't make any sense to be able to do that to the upside. Now, to the downside, if it does look at potentially retracing, obviously we have this trend line is starting to be a little bit more parabolic. And we could look at naturally saying that if this market does start to give us a counter trend line break to the downside after being able to hit at the top of this medium node at 32,800, that you possibly could see that people may get into selling. But the question would be, more than anything else, what is the catalyst of it? Why are people looking at being able to sell at this particular point? That would be my question before being able to make that movement. Is it going to end up being based off of news? Is it going to end up being based off of, obviously we have consumer price indexes that's about to come up. So at 8:30, you could potentially see that there could be a potential U-turn that could end up happening. I would say be prepared for that to be able to happen for the overall movement, and then after that, kind of work accordingly off of that. That's the reason why I'm not interested in being able to stay in this trade on US 30 to the upside and try to continue up on these last few points, just because just don't know what's going to end up happening. So we missed our position on being able to get into it a little bit earlier last night. So it is what it is at this particular point. Alex, do you have a pair that you would like to be able to take a look at before I get out of here? Is there any pair that you would like to be able to take a look at? We already went through Nas. Nas, we're in a buy trade right now, trying to get out at Nas. We end up having two trades at 860 and 840, respectively, for us to take profit levels, about 20 points away from that. I want to be able to see that this market continues to keep on moving at the pace that it is. DAX, we end up taking the trade, but I said that it probably wouldn't be best to stay in that trade because I felt like now we're kind of running out of room. And we'll go from there. What's your view on Euro United States dollar and pound United States dollar? Euro United States dollar went through that a little bit earlier. We'll talk about that again. And I haven't took a look at pound United States dollar yet, so I'll take a look at that as well. Let's see. Euro United States dollar, I feel like it's in the long term. I feel like building up into a long-term consolidation. Obviously, the movement's to the upside for people that like to be able to scout, but I don't like trading inside of consolidation personally. I like trading on the outside of it. So I would not personally make a move off of on Euro United States dollar for its buying or selling until the market breaks above 1.02930, or if the market ends up finally breaking below and closing below 98.75. So me personally, I'm kind of out when it comes down to Euro United States dollar. Let's take a look at pound United States dollar, and let's take a look and see what's going on with that. That'll be the last trade of today, and kind of move forward from there. Last time I took a look at the pound United States dollar, we talked about this large consolidation ended up happening. It finally ended up breaking to the downside. So we know that the long-term direction is to the downside, at least at this particular point. Now, a couple things end up happening. When this market end up having this retracement on this last swing, it only went to the 236, meaning that we're probably going to end up seeing an 80-20 rule that was going to end up being in effect, which meant that when the market ended up getting to the 127, we're probably going to see a little bit of a struggle. And essentially, that is what's happened over the course of the last week. We see that more buyers start to get in right around the 127 and start to push the market to the upside. Typically, 80% of the time, once the market ends up hitting the 127, after only retracing towards the 23.6, you'll see that the market will start to push up and more buyers will start to get in. At this particular point, I probably wouldn't do anything off of pound United States dollar either, because obviously the long-term direction is to the downside and the market is actually retracing. So because the market is just coming out of the buy zone, typically it takes 7 to 11 days of overall movement to be able to complete, to be able to get this market to fully have a solid retracement. So in the midst of being able to see that happen, I'll wait for the market to get into the sell zone on the daily, and then after that, give a counter trend line break. Once that happens, then after that, you got a better opportunity of being able to get in. Currently, right now, there's really no move to be able to get in for that on that pair. So there we go. So went through a few different pairs. Currently, right now, we are up on NAS and we are up on DAX. DAX is about 30 points away from take profit. We'll take a look at NAS. NAS is about 5 points from take profit one, and about 15 points from take profit two. Probably going to end up being some scalps today. We missed out on this market when it truly broke out. Probably could have got a little bit more for that movement, but that's okay. We've started off a great week when it comes down to trading. Don't want to give it up being stupid when it comes down to trying to just jump in and be overbearing when it comes down to the trade account. But like always, if you're interested in what I end up doing, please make sure that you end up clicking on that boost button. I end up doing this each and every morning at 6:30 and on the evenings at 9 p.m. If you would like to be able to know what I end up doing from a personal trading perspective or coaching or anything else like that, send me a private message. I end up contacting everyone as soon as I end up getting those messages to be able to say, hey, how you doing, and kind of being of service in any type of way. Automation systems, the FX Striker, the Swing Trade EA, the FX Vortex system that's about to come out in the next month, right before October actually ends up hitting. If you're interested in learning any more about those, once again, send me a private message. But like always, make sure that you end up planning your trade and trading your plan. I see each and every one of y'all a little bit later on today. Hopefully we can be able to make a little bit of money today and continue this rally that we're having towards our overall movement to the upside. Everyone, y'all have a good one. Take it easy. Do you have automation trading for passion challenge? FTMO, yes. I haven't tried it on any other one, but FTMO, yes. Send me a private message. We'll talk about that. We'll talk about that a little bit later. All right, everybody, take it easy.